So let's see what happened. Our target is down here. Our stop, where would we put our stop? Now, this isn't actually a particularly good trade. I just wanted to use this as an example because we found it quite quickly. Because where would I put my stop? Well, this is all a bit messy, and it's quite a volatile share. It can move this distance in a day. It can move a big distance in a day. So I've got to have my stop quite far away, which isn't ideal for a trade. So I probably wouldn't even do this trade. But as we're using it as an example, let's carry on. I'm going to put my stop on this one up here above this peak, which is a sensible place to have a stop, because if it broke above there I would have definitely got the trade wrong. And that's the question you ask: where would I have to have my stop to know I got the trade wrong? Well, if it went above there, I'd know I'd got the trade wrong. The reason I say it's not a very good trade is because that's so far away. And if I look at my risk reward, it's not a 2-to-1, which you don't. So I wouldn't really want to do this trade. But let's carry on using it as our example. So I put my buy to cover, which is to get out of the position up here. And let's record that. So it's at about 61.25, I think. So my buy to cover at 62.5. But buy to cover is just what you call it. If it's your stop to get out of a short trade. You'll see this when we're doing the live trading sessions. I'll explain it and I'll show you exactly how to do this trade for real. So if you're wondering, well, how do I do these trades for real? You'll see that on the live trading sessions. I place loads and loads of trades for real, so you'll get good at this. You'll get to see a lot of these examples. Okay, that's everything I need to know. So let's step it forward now, see what happened. Okay, kind of going sideways, gone back up. So lucky my stop was up there, because you can see pretty crazy share. It's quite volatile. Oh, okay, looking good. It's trending. Basically, it's just trending down, which is what we thought would happen. And there, on that day, it's hit my target. I think. Has it? We said what was the target? Looks like it on the chart that we fit. We didn't write down the target. That would have been handy. Target would have been the low of this bar. So let's just have a look. Low of that bar is 41.43. So target 41.43. And let's have a look. Oh, the next day it went down again, even further. On that day, 41.4. Yeah, it hit the target on that day and the next day. So we would have been out on this day. Would have actually been out on the day before there. Let's see if I can. Oh, no. Let's try again. So that day there, that's when I would have been out of the trade. So let's put in the details. The date, 17th of February 09. 17th Feb 09. Price at exit, well, it would have been my target. It could have been my stop if the trade had gone wrong, but it just happened to be my target. So you don't, as you're seeing in these examples, you don't always have to be stopped out on your stop. Sometimes it just hits the target price, and that's when you get out. Or what you can do is, this is supposed to be a beginner session, and we're kind of getting a bit advanced here, but let me explain anyway. What you can do is when it gets near the target, you can then put a close stop on it if you want to try and get some more profit. So I could say I now switch my stop to the high of the bar. Just out of interest, no, I'm getting advanced now. We'll save that for another lesson. But you could move a closer stop. You could use the high of the bar, and then you could see if it drops further, you'd stay in the trade for longer and you'd make even more money. We'll actually cover that in a lesson specifically because I want you to learn that strategy. It's an excellent stop strategy. I'll make sure we do a lesson on that. So, there was me getting carried away. There's the day we exited, there's the price we exited, the reason it hit target. Okay, and we can now work out the gain. Now for this one, the gain, because it was a short trade, will be the entry price 53.75 minus the exit price 41.43, which equals 12.32. Is that right? Yeah, that is right. Wow, good trade. Okay, let's put pounds again when it was dollars, but I'm sure someone knows how to do that. Doesn't really matter. Now, the percentage return. How do we work out the percentage return? So it says price sold divided by price bought. So again, that will be the other way around because it was a short trade. So it will be price bought divided by price sold. And then minus 1. And then times 100. Wow, nice trade. We made 30% on that trade. On our second ever paper trade, we're doing well. So we made 30% return. And how long did that take us? That took us about 6 weeks. 30% return in 6 weeks. Pretty good. Now, if we can keep that up, I think we'll be ready to start real trading. So let's go back. We need a print screen of the chart, so we press print screen, the button on the keyboard, print screen, and let's go up and let's paste and let's move it up, shrink it, keep moving it. Okay, add a little bit more, and let's chop off the bits we don't need. Once you've done this a few times, it's very, very simple to keep this paper trade diary. Very, very simple and extremely valuable. You'll learn so much by doing this. So there we go. There's the chart when we bought. There's the chart when we sold. Was there anything to learn from that? Well, maybe your lesson was, hey, I noticed that it then kept on going down afterwards. Let's just see if it did keep on going down afterwards. No, it actually bounced there. Yeah, it pretty much bounced and turned. So it only went down a little bit. So there wasn't really much more we could have got out of that trade. But something for the lesson learned that you can see is you can step it forwards and you can see, well, could I have got more profit out of it? And if you could work out how you could have got more profit, and that could be your lesson learned. So quite often what I do is when with my paper trades, when I got out of them, or my real trades, I'd see what happened after that to see if there was something I could have done to keep me in longer. Sometimes there wasn't, sometimes there was, but I'd learned a few lessons doing it that way. So that's the second example. Again, we'd save, and then we'd go on and we'd just carry on doing this until we've done, I don't know, do 30 trades like this. How long will it take you? Well, just as long as it takes you to do this each time. So do 30 trades, do 3 trades a day, 3 paper trades a day, and record them like this. After 2 weeks, you'll be good at this stuff just by doing this, just by going through this process. It's a fantastic way to get good at trading. Really, really, whatever you do, make sure you do this. Even if you just do 1 paper trade a day, that would help you. Even if, let's say you just think, wow, I'm so busy, I can't possibly do 1 paper trade a day. Do 1 paper trade a week. If you just did 1 a week, you'd start to get good. But make sure you do this. Make sure you do this because this is a great way to accelerate your learning. It really is. And I'm sure you can do at least 1 paper trade a week. Try and do 3 paper trades a week. Maybe you do them on the weekend, do them on Sunday or Saturday or in the evening, and this will start to get you good. Okay, that's my beginner session, how to do paper trades. I hope that was useful. I really do hope you follow through on this and do that, because you will start to get very good. If you do 30 paper trades, fantastic. Keep doing the paper trades until you're making money on paper, risk-free, and then you can start with real money. Open a stockbroker account, open a spread betting account. Very easy to fill in the forms. Just click on the link on our site. It will take you there, tell you how to do it. Then you can put your money in your account and you're ready to trade for real. That's what this is all about. You want to start doing this for real. You want to start making money. And this is the way, paper trading is the way so you can prove to yourself that you can.